Kewsong, thank you so much for joining us here
I'm
at
happy to be
Return
here.
International. Great to have your thoughts as well today. Private equity's had a great run, hasn't it?
Sure
Is that
has.
going to continue, or are the signs showing that there might be a bit of a slowdown coming?
Well, you know, it's funny. Everyone says, boy, returns could be challenged, it's going to be harder, but I have to tell you, it's always been hard. It's always hard to generate outperformance. And so for all the time I've been in the industry, almost 30 years, every year there's not been a day where I've walked in where I've said, boy, it's going to be easy to make returns. Moving forward, what's challenging? Clearly we're in the late stage of a global expansion. Clearly you've got a lot of geopolitical noise in the system. And there's a lot of dry powder. And so the question is, how do we manage and keep navigating through the environment to generate returns? And at least at Carlyle, 60 to 70% of all of our returns generated through fundamental operating performance at our portfolio companies. It's not multiple expansion, it's not financial leverage. So when it's that fundamental in terms of how you create value, either top line growth or productivity, I like our chances to keep driving returns, right? So it's all about having the right platform, having real deep sector expertise, having a culture at a company that wants to help each other and figure out how do we apply the best judgment and the best talent onto any decision or company, and then using all that to drive fundamental operating performance in our portfolio companies. And if you look at it through that lens, I actually think while it's going to be hard, there's a case to be made that you can keep driving returns. And that's what we're positioned to do.
You talked there about talent within the company being
Sure.
crucial to that. Obviously,
Sure.
Carlyle's been very successful for a long time. That must have an impact when times get hard as well, I guess.
Yeah, well, you know, it goes two ways, right? When times are hard, it's you don't lose as many people either. But it takes a long time in our business to find and work with and get to know each other and calibrate your thinking. And the benefit we have are 650 talented investment professionals around the world. They're a great fit. They really, really work hard every day. And when times are bad, we all pull together and we work together. And but it's the culture of teamwork and wanting to help each other that I think is going to be the secret ingredient. It's going to be the platform, and how the platform can help the individual and the deal teams is going to be increasingly important as you navigate through a more complex environment.
You touched on your first answer there in terms of on how difficult the geopolitical situation is. Populism is on the rise.
Sure.
How does that impact an industry like yours? And is it something you have to be observant of in terms of your clients?
Well, clearly you have to be thoughtful about the impact on markets, the impact on on the companies themselves, and what the outlook is financially, in terms of what these trends means in terms of the underlying business performance. I think reading into your question a little bit, are we thinking about screening for these types of social impact types of issues as it relates to our companies? And I think that the right way to answer that is, we're financial investors. We have a fiduciary obligation to manage our LPs' money as wisely as possible and to be great stewards for their capital. We are driving for investment performance and return. Having said that, the way we do that is we are very careful about making sure that we are thinking about companies that are being socially responsible, that every company that we look at, we have an ESG screen. It's part of our investment committee process. And you know, there are certain industries that are no-go industries. But to say that the number one objective is to say we're going to do this deal because it does X, Y, and Z, I'm not so sure that's the right way to think about it. I think the right way to think about it is this a great investment? Does it fulfill the objective of what we're trying to do as a firm? And by the way, can it be doing it in a very thoughtful and socially responsible way?
And if you do that, I guess you have a happy client and a happy outcome, but you also reputationally benefit too.
Well, I hope so. We're one of the leaders in ESG. I mean, it's been fully embedded in our investment process. We have full-time people who do nothing more than help diligence from an ESG perspective all of our investments and our deals. In Europe, for instance, we report on our portfolio companies to our limited partners as to kind of the progress that each of our portfolio companies are making from an ESG perspective. So it's a very important issue. I think we're among the leaders, if not the leader, recognized in fulfilling that aspect of being socially responsible. We are trying to take that practice and now bring it in as a best practice across the broader platform in the Americas and even in Asia. So we have a lot of work to do, but I'm grateful that we were very aware of this issue early on, and I think we're in the lead in trying to keep pushing it as a good way to think about investing. And by the way, it makes you better investors. It makes you better to think about ESG from the perspective of how does this make the company better in terms of thoughtful about cost, about ways to drive revenue, about employee morale and retention at the portfolio companies where their employee base is being mindful of these types of issues. So it just makes you better at investing when you're conscious and can apply that type of thinking into your investment process.
It makes solid business sense. In your first answer, you also referred to the amount of dry powder. Mm-hmm. With that in mind, what's Carlyle looking at and what sectors particularly excite you in this sort of environment? Sure. Have you got things you want to talk about this week to people that you're particularly excited about?
Well, I'm not going to talk about any one particular deal. I can talk very, very broadly. Well, first of all, there is a lot of quote-unquote dry powder. But the industry does put to work about $150 to $200 billion a year. There's about $1.2 trillion of quote-unquote dry powder. You know, when you think about investing that, let's say, $1 trillion, because I can divide by, you know, it's easier to divide into, but over 5 years, that's about $200 billion a year. So I'm not so sure that there's a massive amount of dry powder that is just waiting out there idly to be put to work. It's a more or less about at the pace that the industry has been deploying at. So that's just big picture observation number one. I would say from our perspective, we find real growth opportunities still in China. I think tech obviously is an interesting area. Healthcare globally is quite interesting. Ways to take advantage of volatility as opposed to being scared of volatility. For instance, credit opportunity strategies, special situations, distress strategies are very interesting to us right now. And thinking very long term about companies that will be resilient through cycles, be it in infrastructure, be it in long dated private equity, very, very interesting opportunities right now.
Do you think that leads to a slightly more long-termism type view as well?
Well, we've always been long-term oriented. That's the whole nature of our business, is we have the luxury of having private capital, locked up capital, that we can look at businesses over a long term and say, what are the real decisions and the right way to think about creating value at these companies? Are we going to change our orientation because of the issues? Not really. We're just going to consistently, steadily keep doing what we've been doing, which is take a step back over the long term. What's the right way to partner with a talented management team in a great company and make some fundamental improvements at the company to create value?
You're addressing this conference, giving a keynote speech. People are going to be very interested in what you have to say. Carlyle's been hugely successful. What do you hope they take away with them from what you say to them?
Well, hopefully there'll be people there in the audience to listen. But our industry has had a tremendous run. I think private capital will continue to grow. I think there's going to be an institutionalization of the industry where the big will get even bigger. And I think you're going to see different asset classes emerge in the private capital model. I think private credit will continue to grow and become important. Real estate has already grown and will continue to grow. Infrastructure will continue to grow. New regions are going to open up. Japan is going to open up to more private equity. So I think you're going to see a continuation of growth. And I do think the winners will be those global institutions that are bona fide platforms that know how to operate in different regions, different cultures, different industries, different asset classes, because the industry is professionalizing, it's institutionalizing, and it's going to be incumbent on these firms to grow, mature, and transition in that way to continue to lead and drive the industry.
Being devil's advocate, if
Sure.
they are institutionalizing, does
Right.
that mean they're going to be one of the areas absolutely ripe for disruption at some point coming soon?
Yeah, people have been asking me, can our industry be disrupted? And of course, every industry can be disrupted. I think our industry may be, if I might say, it may be a little bit less susceptible to disruption. And the fact, simple fact being, it's all about judgment when you make an investment decision. We need to figure out, can this CEO run this company, deliver this business plan over the next 5 to 10 years in this sector with all of the issues in and around this company and the sector. And that's not so simple to do.
There's a lot of human factor and nuance in there.
It is really about judgment. It is about pattern recognition. It is about pulling together so many different viewpoints and a diversity of viewpoints to try to make a judgment. And it ain't easy. It's not easy.
An industry very much still about people. Thank you so
Absolutely.
much for sharing your insights.
Thank you for having me.
Great to talk to you. Thank you.